All right, let's dive into this SpiceJet earnings report, shall we? It looks like the board of directors met on February 25th to review and approve the unaudited standalone and consolidated financial results for the second and third quarters of fiscal year 2025. So, where should we start? Maybe with a general overview of SpiceJet?
Good idea. SpiceJet, as we know, is a publicly traded Indian airline. Their core business revolves around providing passenger air transport services with a growing presence in air freight and logistics too. They've got a pretty good reach within India, and it looks like they also have some subsidiaries like Spice Express for logistics and AS Air Lease 41 in Ireland for, leasing.
Okay, makes sense. Now, it seems like SpiceJet has undergone some strategic changes recently, like that qualified institutional placement or QIP. How does that impact their operations, both standalone and consolidated?
Well, the QIP is definitely a game changer. They successfully raised INR 3,000 crore rupees, attracting some major investors, and that's helped them resolve legacy liabilities, expand their fleet, and generally accelerate growth. When we look at both standalone and consolidated results, we need to consider how this infusion of funds stabilizes the entire group versus just the parent company.
Got it. Let's dig into the numbers then. What are the key highlights from the income statement, focusing on both standalone and consolidated figures?
Absolutely. Looking at Q3 FY25, on a standalone basis, SpiceJet swung to a net profit of INR 26 crore rupees compared to a loss of INR 300 crore rupees in the same quarter last year. I mean, that's a huge turnaround. The consolidated results show a similar trend. We've got to keep in mind, though, there were some one-time gains from settling with lessors that bumped up the numbers a bit.
Okay, so profitability seems to be improving, at least for this quarter. What about EBITDA, PBT, and EPS?
Their standalone EBITDA for Q3 was INR 210 crore rupees compared to just INR 3 crore rupees last year. And it was even higher, around INR 316 crore rupees, if you exclude the impact of foreign exchange fluctuations. Pretty impressive jump.
And how does this QIP affect their dividend situation? I didn't see any dividend declarations in the release, but is there capacity for it now?
Yeah, no dividend declarations this time around. Given their history and current financial standing, dividends are probably not a priority. The focus is clearly on stabilizing the company and paying down debt. The QIP does give them more breathing room, but shareholder returns in the form of dividends are likely a ways off.
That makes sense. Let's switch gears to the balance sheet. What should we be paying attention to in terms of assets, liabilities, and equity?
The big thing to note is that SpiceJet achieved a positive net worth for the first time in a decade, which is huge. The QIP really strengthened their financial position. Still, the auditors have highlighted that current liabilities exceed current assets by a significant margin, both on a standalone and consolidated basis. So while things are improving, there are still some solvency and liquidity risks to keep an eye on.
Right, so it's a mixed bag. Improved net worth is great, but those current liabilities are still a concern. What about cash flow? How is that looking?
Cash flow is crucial for an airline. The report doesn't give us a detailed cash flow statement, but it does mention that the QIP proceeds are being used to pay statutory dues and settle liabilities. That's a positive sign, indicating that they're addressing their immediate obligations and, I guess, improving their credit worthiness.
So they're using the cash to clean up the balance sheet and address those liabilities. Got it. Now, the report mentions some non-compliance issues with laws and regulations. How serious are these?
Well, the auditors have flagged this as a concern. It seems SpiceJet has had delays in depositing TDS, GST, and Provident Fund contributions. They've made payments to clear the principal amounts, but potential fines and penalties are still unascertainable. This is definitely something investors should monitor closely.
I agree. Non-compliance can lead to significant financial repercussions. Also, there's this ongoing litigation with the erstwhile promoters, Mr. Kalanithy Maran and KAL Airways. What's the latest on that?
Yes, the never-ending saga. SpiceJet received some money years ago from the erstwhile promoters for warrants, but the deal never fully went through, leading to legal battles. The courts have ordered the company to deposit funds, and there's ongoing back and forth. The management believes no material liability will arise, but the auditors have included an emphasis of matter paragraph in their review report, which means it's still a significant uncertainty.
So it's basically a wait-and-see situation with potential legal and financial implications. Got it. Let's talk about segment performance. How are the air transport services and freighter/logistics segments doing?
The report breaks down revenue and results by segment. Air transport services, which is their main business, accounted for the lion's share of revenue. The freighter and logistics segment is smaller, but still significant. It looks like the air transport segment experienced a significant loss, but the overall revenues were pretty good.
Okay, that gives us a clearer picture of where the money is coming from and where the challenges lie. Now, let's jump to the key financial ratios. Are there any that particularly stand out?
Unfortunately, the report doesn't provide a comprehensive set of financial ratios, but we can see that their net worth has turned positive, which is a major improvement. It would be helpful to have more data on profitability margins, liquidity ratios, and debt to equity to get a better handle on their overall financial health.
Agreed. Without those ratios, it's tough to make a fully informed assessment. So, what are the major trends and comparisons we can draw from this report?
The biggest trend is the turnaround in profitability in Q3, driven by strong passenger demand and the QIP. Also, SpiceJet has been actively settling disputes with lessors, which has resulted in significant financial benefits. But the continued non-compliance issues and the ongoing litigation are definitely causes for concern. It's important to also note the difference between standalone and consolidated performance. The subsidiary performance can significantly affect the overall picture.
Right, the settlements are a positive, but the compliance and litigation issues are still hanging over their heads. What's the outlook for SpiceJet based on this report and current market conditions?
Well, the management seems optimistic. They're focused on returning grounded aircraft to service, enhancing customer experience, and optimizing their network. Debojo Mahashi, the chief business officer, expects double-digit growth in RASKs, that's revenue per available seat kilometer, in the fourth quarter. So there's potential for further improvement, provided they can manage their costs and resolve those outstanding issues.
Okay, so cautious optimism seems to be the prevailing sentiment. What are the key catalysts and risks that could impact SpiceJet's future earnings?
Catalysts could include continued strong passenger demand, successful fleet expansion, and favorable outcomes in their legal battles. Risks include rising fuel prices, further regulatory hurdles, and any potential downturn in the aviation industry. It's like learning to adapt a recipe when you're missing some key ingredients.
Good analogy. So, summing it all up, what's your final assessment of SpiceJet's financial health and future prospects based on this report?
SpiceJet has definitely made progress in turning its business around thanks to the QIP and some smart operational decisions. The positive net worth is a major milestone. However, the company still faces significant challenges, including high liabilities, compliance issues, and ongoing litigation. I'd say it's a cautiously optimistic outlook, but with a fair amount of risk.
Well, as always, we advise investors to check with certified experts before taking any investment decisions.
Absolutely. Disclaimer, we advise investors to check with certified experts before taking any investment decisions. So before we wrap up, I would like to invite our listeners to like, share, and subscribe to our YouTube channel for more deep dives into financial reports.
Thanks for breaking down this complex report for us. It sounds like SpiceJet is on a recovery path, but it's definitely not a smooth flight.